Hi Sheila, thanks for having me. My name is Mahesh Kashyap. I'm from Dallas, Texas. My company name is OVTLYR, spelled as OVTLYR. So we build a platform for retail investors who are investing in stock market. I have been in this industry from last 7, 8 years. I have built another startup in the similar domain, which I'm in process of, which is going through an acquisition as we speak. I can't disclose the details yet. That previous startup was on B2B side. OVTLYR is focused on B2C. So our goal is to provide quality insights and analytics to retail investors so that we can help them improve their investment decisions. And really, I wanted to, provide it for masses. We have been working in this industry and got a good insights and the solutions. So we wanted to see how we can build it for pretty much everybody out there. They can benefit from this. Sure. So my background, I mean, I'm engineer by trade, and over a period of time, I have been building companies mostly around software development. Last 7, 8, 9 years ago, I got into some projects involving building custom software for hedge funds and investment management industry. At that point of time, me and my co-founder, we launched a company building these custom softwares for hedge funds and investment management professionals. So over a period of time, we built that profitable business, and definitely worked with all kind of data, including fundamental data, macro data, also building AI based models, taking all of that data and building something unique out of it. Over a period of time, we have been involved in a lot of R&D as well. We built a big enough team, trained it, worked on some of these cutting edge algorithms. And recently we launched OVTLYR as a product. We wanted to build something and offer it to retail investors. We launched it at just a free pilot to gauge some early interest. To our surprise, we got a lot of interest, and over close to 4,000 investors, people signed up for our pilot program. And then we actually went ahead and invested a lot of money, our own money, as well as our resources into this product. And officially, we will be launching on September 5th, which is probably a few weeks away. So that's kind of a little bit about my background and how we came from, last 7, 8 years to where we are right now. Sure. So he's basically into maths and building algorithms. He worked for US for Uncle Sam. I can't go into much details, but he essentially has built cutting edge algorithms and a lot of intelligence related work for US government. And how I met him, I would say that it was at one of the common friends, one of our common friend introduced us as someone that I should meet. And we both wanted to do something for stock market, because on side I was investing, I was myself an investor stock market. When investing in stock market, he wanted to build something for the stock market based off of his background. And that's how we kind of met early on. And luckily we got an early project which led us to build our previous company. And then it's been in history so far. That's a very good question. So our secret sauce is understanding and measuring investor behaviors on stocks, industries, sectors, and indexes. If you think about it, the equity markets are mostly driven by human emotions, more specifically how we act and react to those emotions. We call it human behavior. So our secret sauce is essentially ability to capture and measure and provide insights around investor behavior. Equity markets are mostly driven by human emotions, more specifically how people act and react to those emotions. I call it investor behavior. Our algorithm can measure that behavior as a noise generated due to different human, actions and reactions. Then we have ability to compare it against a baseline of a fundamental and macroeconomic data to summarize what a negative and positive behaviors as fear and greed, respectively. Essentially, if you think about it, stock market is an auction where buyers and sellers decisions basically impact the price and its trajectory. What we use is combination of our measured data and the concept of a selective contrarianism to show our insights. So again, our differentiation, why people should see us as a tool, in addition to what they are already using it, is because we provide something around human behavior, human how they act and react within the stock market. If you think from the perspective of, we have different data points that we capture, but if in the end, when a person sees a news or they see certain things happening in the market, you will see certain behavior or certain standard action. For example, when there is too much fear in the market, usually what happens, it leads to sell off in the market. When a stock is going up, and then you will see a FOMO effect, where everybody want to buy that stock. So there is a set behavior of how we as human react and do certain things. So we are able to build that in form of derive that through our algorithm. And again, we have way of summarizing that result, that noise that we capture in this called negative and positive behavior, which we are calling fear and greed. Based off of that, we can show insights whether this stock has been overbought, oversold, whether this company is undervalued or overvalued. And also, using our own data, we have taken a step further to actually build portfolios based off of our data. So essentially, if you think from that, using our own data, we are able to provide an output of how much a person or how much an investor can allocate within an asset, within their portfolio, based off of our data. Yeah, so there are different ways to use this information. First thing you can do is you can look at our data and look at an industry or a sector level. Within a sector, you can see how many companies. Let's say a sector consists of 300 companies, for an example. And based off of our data, you can see how many companies are undervalued and overvalued on day-to-day basis. And that information is generated through our proprietary algorithm. You can start from getting a feel of the broader market, looking into indexes, looking into sectors, looking into industries. And then if you want to look into individual stock, then we have also data that shows us, show our members when to be risk on, a risk off, based off of when we see that there's, for example, too much fear in the market, which resulted in some of the, more buying opportunities or more opportunities where a company may be undervalued. So based off of that information, we are able to generate a risk on and risk off kind of suggestion that people can look. We have few other data points which are very valuable, which at least our current members have provided feedback. One of them is around volatility. We are able to capture when volatility is negative or positive, means we have way to show the directional nature of the volatility, because volatility can push a price down or up, and we can capture it and showcase to our members. Currently, we only cover stocks and ETFs. Also in stocks, we only cover around 1,600 companies. We start from your mega caps, large caps, mid caps, and then we cover almost 150, 160 ETFs, indexed ETFs. We don't cover any other asset class as of now. Oh, my personal investment, it was H&R Block few years ago. I'll give you an example because that's like literally I talked to someone few hours ago. We were in very early stages. We didn't even release the product. I just had internal visibility on our data. I bought H&R Block at around $15 something. Again, this was based off of our data when I saw that there's too much fear in the market, and I was able to sell that stock within few months at around $21. That was a pretty good return on investment for a few months. I am not only, my firm belief is, if I can't use our own data to trade, to invest, I don't want to give it to someone else to use it. So I definitely use our own data in conjunction with some of the other data points, like fundamental health of a company. I do look into some of the other data points, but I also consider our own data as a key input to make my decisions. Yeah, so we are launching as a it's a subscription based model. We do have a free tier where we provide a lot of useful information on the companies, on sectors that you don't even need to pay us. You can just simply sign up with your email and get access to that data. We will have some premium features included in it, which people can access. Our price point is around less than $10 per month. So that is around a yearly subscription that comes to around $119 per year. That is our subscription pricing. Yeah, so we are, so far we have bootstrapped, though I am meeting investors right now, talking with them, and we are definitely looking for some opportunities, looking to work with some investors. But so far we have bootstrapped our company. In fact, we have recently hired around 3 analysts that will be helping us with this daily newsletter writing and distribution of daily newsletter. And our goal is to keep adding members in our analyst team. Definitely around, we want to hire more people in future in our development and research team as well. In a way, we are lucky in the sense that between me and my co-founder, we are able to fund our startup so far, just because we built a profitable company before. The hardest part is when market goes south, like recently, where you will see less VC money pouring into startups. It becomes very hard to sustain. And I have seen a lot of startups are going out of business, not because they don't have a good idea or a good product, just because they can't fund it. The hardest thing that I'm seeing right now is definitely around finding some of the good resources around who can help us build this newsletter and content based strategies. We are spending a lot of time and effort to build all of these strategies. So there are challenges all around building a business, developing a product that can scale, and of course around fundraising as well. So there are challenges, but one thing I have learned is you have to just keep on going. Yeah, there is definitely more investors, people more open to early stage investing in Bay Area than in Dallas and Texas. But I feel like there is growing number of ecosystem in Dallas, Fort Worth, and then in Austin area as well, where there are new VC firms and new generation of investors that are investing in startups. But definitely Bay Area still has an edge over any other place that I have seen. Yeah, my closing thought is, if you are investing in stock market, and if you have not checked what we are doing, then you definitely need to check OVTLYR.com, which is, again, people get confused with the spelling. It's OVTLYR.com. We definitely are doing something around the data that is not easily available to retail crowd, and it's hard to capture and provide good insights. So we have been building this product from last few years. All I can say right now at this point of time is please do check the website and at least sign up for your free account.